Hello everyone, welcome to XIMB Institute of Management Bhubaneswar. This is a class of Sustainability, Development and Corporate Sustainability. Today we'll talk about sustainable practices in banking. This is group 4 and the entire presentation will be carried forward by Geetika Naran, Gaurav Upadhyay, Indranil Roy, Ishan Agrawal and Gyan Darshan Nayak. This is Ishan Agrawal. So taking you through the agenda of the entire presentation. First, we'll talk about introduction. Then we'll move on to the key drivers that is affecting the banking industry towards moving and taking up the sustainability practices. Then we'll talk about some global standards of banking sustainability, and we'll present a comparative analysis of the sustainable policies of India with the global standards. Then we'll present the conclusion of the entire presentation. So, coming on to the introduction part, we can all conclude that banking can be classified as commercial banking and investment banking. While commercial banking covers services such as cash management, credit services, deposit services, and foreign exchange, whereas investment banking covers services such as asset securitization, M&A, and corporate restructuring to securities, underwriting, equity private placements, and etc. Also, banks are involved in investments, underwriting of securities, portfolio management, and the insurance services. We can understand that bank sits at the center of an economy. Though it might appear that the carbon footprint of a bank is usually low, so the sustainability drivers which drives the bank to adopt sustainability practices becomes very important to understand so that we can have proper key points which can be motivated or driven into the bank's policies so that they can adopt sustainable practices. So currently there are four opportunities or four drivers, if you can say, that are affecting banks the way they operate. One is lender's liability, one is borrower's financial obligation, one is environmental concerns, and fourth is business opportunities. Well, lender's liability is associated with the financial risks, or you can say the environmental risk banks face when granting or extending loans, because what the lender, what the one who is taking up the loan is choosing with the money becomes very important, because that also adds up to the risk bank is adopting while giving the loan. Next is borrower's financial obligation. Well, as a borrower, if a borrower is not attached to some sustainable practices and ends up creating a mess to the environment and ending up to clean, for example, contaminated sites, might impair his or her own ability to repay the loan. So it's important to understand lender's liability and borrower's financial obligation while evaluating risks. Next is environmental concerns. It can be regularly seen that there are huge amount of regulatory frameworks which are coming up, which has proactively committed towards environmental protection and it has been developing for over a year. So it is important for a bank, though with a low carbon footprint, to take up environmental practices that not only sustain the environmental policies but also create new policies that help us achieving our goals better, achieving the goal of sustainability better. Next is business opportunity. Well, the traditional approach of the banking sector is to be regarded as reactive and defensive when it comes to sustainability policies. However, several international banks have recently adopted innovative, proactive strategies to capture the opportunities associated with sustainability. So this has opened up new business opportunities like green bonds, as many of the countries have adopted, or other major opportunities like China has adopted. So basically, sustainability has also opened up new platform for businesses in banking industry to operate.
Hi, my name is Gyan Darshan Nayak and I am going to describe the global standards of banking sustainability. Recently, banks have been more responsive towards sustainability because of the risks associated. Recently, Bank of England asked the insurance sector to analyze the climate change related risks for the insurance they are underwriting. It also asked oil and coal sector to risks arising from stranded assets that are affecting global sustainability. Initiatives towards environment and sustainability. Voluntary initiatives focusing on the financial sector and the environment, such as the United Nations Principle for Responsible Investing, and Equator Principles. UNEP inquiry for a sustainable financial sector at the 2015 World Economic Forum has been taken to make banks more responsible towards the global sustainability. Let's look at the ERM guidelines in Bangladesh. The Bangladesh Central Bank mandates banks to train their staff and raise their awareness on environment and sustainability issues, formulate their own environment and sustainability risk management framework, introduce sector specific policies, and start reporting on environment and sustainability issues. The policy includes the classification of investment into high, medium, and low risk categories and division into sector specific aspects to complement the general due diligence guidelines. The main goals are to protect the bank's financing from the risk of a deteriorating environment and ensure sustainability banking practices.
Now, having looked at the global standards of banking sustainability in Latin America in the previous slide, let us focus on the global standards of banking sustainability in Asia, and in this case, China. So, in China, that is what is called the Green Finance Program, which is actually a program for integrating environmental issues into financial decision making. Now, what makes this program unique to China is that Chinese initiative, unlike others, focuses on banks and other lenders directly. So this is one of the main programs, which is a green credit policy, which was started in 2006 and is currently being overseen by three major agencies, including Ministry of Environmental Protection, the People's Bank of China, and the Chinese Bank Regulatory Commission, which is the CBRC. So what are the objectives of this program? One of the major objectives of the program is that banks should restrict loans to heavily polluting industries and at the same time offer different interest rates depending on the environmental performances of the lender sector. So what do we aim to achieve by this method? So this goal of this policy is to ensure that the Chinese banks move away the loans from the highly polluting and highly energy consuming enterprises and projects and transfer those loans or move them towards enterprises that is favoring renewable energy and those initiatives that favor energy efficiency and emission reduction projects. Now let us look at a comparative analysis technology in the form of either electronic transfers, ATMs, internet and mobile banking. Even some multinational banks and financial institutions are adopting clean technologies and are embedding the concept in their core business processes, which means that they are now currently incorporating these technologies and other concepts in their current business strategy, which even includes risk management and also helps them in their decision making. So, in the end, it actually helps them attract investments from new avenues. One of the examples being socially responsible investors who are actually looking to invest in projects that are conscious of the environment and the hazards it faces, which means they're actually looking at environmental projects which are sustainable to the environment and to the society in general.
Now that we have seen the analysis of the sustainable policies in India, next we have some indices which are really helpful in doing this analysis. So as we know that there is this popular index, Dow Jones Sustainability Index, and that is frequently used by many of the banks. There are also policies which make it mandatory for banks, major public sector units, and companies in the public and private sector to invest 50% of their CSR funds in afforestation initiatives. And this is a mandatory practice, it's not an option. Also, we see that the ICAI, which is the Accounting Research Foundation, that committee is working on a new set of rules on CSR and the Confederation of Indian Industry. Now these committees are working together and they developed the green rating system for Indian companies. So whatever companies which might apply for funds to banks, they will be rated on these green rating parameters, and thus the financing will be done for these companies. Also, we see that the pressure to adopt sustainability has been further intensified with the launch of many sustainable development funds and indices in India, such as the agencies such as CRISIL, which is a rating agency. So these agencies, what they are doing is they are stressing the fact that sustainable development funds should be set aside. So now in conclusion, we see that the emerging economies have tied hands to make the reforms in in other industry or sectors of the economy, and thus it is the prime course of action for most of the banking sector. Also, we saw that the global recession of 2008, it played a major role in making sure that the banking sector is more forward oriented and that they use the E&S measures and integrate it into the risk measures of the industry. So we see that sustainability is not an option but an obligation for all of the banks to stay competitive. Thank you. This is the list of the references from which we could find many useful industry reports, and we have jotted them down here.